Hey traders, Raghee here, and in this free video we're going to cover how we're building our overall trading book. That just means what are all the collective positions in the book. And one thing that I like to do is have my positions in a book basically grouped up in 3 or 4 different themes. I'm going to talk about some of these themes here in this video, starting off with the 30-year futures or the TLT ETF, and just kind of reminding everybody that many futures contracts do have very liquid options chains for those of you that feel more comfortable trading the futures with long call, long put instead of an underlying short or long position. And also those of you that like playing the ETFs and playing the options on the ETFs. A lot of futures contracts have really nice liquid futures alternatives. So we'll look at the market from a futures perspective. We'll set up the futures markets. We'll look at stocks that are moving because of them, but you have a lot of flexibility here. So case in point, long TLT or long the ZB or long options in either. We are both. So one of the questions I'm getting is, Rag, how high could we go? And I'm going to tell you the truth, just more, right? We've been long bonds since basically Q3, Q4, mostly November of last year. So this is not a new position for us, and it's just a brand new acceleration as the market is rapidly discounting expectations of easily a 25 basis point cut in September from the US Central Bank, and then possibly 50, because the overflow now in terms of opinion is making its way to the 50 basis point column on the CME. Here we go. CME website. Where is it? I know I have this up. Here we go. The Fed Funds Futures Tracker here. You'll see the overflow is getting into the possibility of a 50 basis point cut. Okay, so if you're wondering why isn't this 100, it's because the overflow is here. So this is certainly 100. Now we're thinking, could we get more? So that's going to continue to take things like TLT higher. Now you might wonder, what about bond proxies like XLU, the utilities? Yes, the markets were down. There's an overall flush, and equities are going to go with that ride. But notice the resiliency in XLU. This is a pocket of our overall book. So while some of the more straight up equity positions were having a rough go of things, and they absolutely were, I'm not even going to brush it under the rug, we don't overcommit to these. My book isn't full of Microsoft and American Express and the S&P. It's partly full of that. It's about 1/3. I've got another set of positions that I believe are going to continue to do well despite the FOMC and some of the weakness, things like financials and staples, even healthcare. Even though healthcare is kind of running into some trouble, I think these will be more resilient. And then we've got our bond proxies, and we've also got a short Russell position. So we don't commit to a single narrative and a single grouping. Even in my trading book, we spread it out. That way we are not hedging anything, but we are playing positions that should be able to move upwards together. But when we have days like today, the entire book isn't falling to pieces. That's a really important point. So we continue to play the short energies via XOP and also natty gas shorts. Again, long bond and long bond proxies, which are holding really well. And this is what we're taking into the remainder of the week. All right, I'll see you in the next update.